Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Andy Swan, co-founder of LikeFolio, joining us. Andy, welcome back to the show. We're talking DocuSign here, Andy. The stock's pulled back pretty sharply. Last earnings report, the stock spiked to multi-year highs above $107, but we filled that gap to the downside. What kind of data do you guys have here on DocuSign into earnings?
Yeah, it's DocuSign's just kind of a typical story of this market. I think the company's doing really well. You can make the argument that the stock or Wall Street got ahead of itself and is now corrected back. But this company is doing, really well. I think what we need to understand about DocuSign is that it's a very interest rate sensitive company in that most of its customers are very interest rate sensitive. As mortgage as mortgage applications fall, so does DocuSign's usage rate. This company that's extraordinarily sensitive to fluctuations in interest rate in the housing market. But when we look at LikeFolio data on it, it's pretty mixed bag. From a web visit standpoint, you've got that up year over year, which is a very good sign. This is a company that is attracting more and more users. A lot of its AI capabilities are starting to bring in more users. But, it's the growth rate has certainly fallen off here recently. And we see that especially in the app usage, the monthly active users down 12% year over year, which just is a signal, quite frankly, that there's just less going on in the economy. There's less documents to sign. There's less deals being made. There's just less happening. And so, when we think about DocuSign, we think about a company that is far ahead of its competition, that is implementing AI in really strategic and advantageous ways, both for its customers and for its expenses and reducing its internal expenses. So we see this company's profit margins expanding over time. We see its market dominance expanding over time. But you just have to deal with these corrections with a little bit of a long-term view. You have to zoom out at some point. When Wall Street puts something out of favor, it's pretty tough for it to come back. But once it does, we think DocuSign's in the driver's seat.
Andy, I'm fascinated with what you just said about how, and when you read about DocuSign, they're big in real estate, they're big in healthcare, yep. Right? That's two places where they focus on. And mortgage applications have skyrocketed the last 2 weeks. We get them every Wednesday morning, and that should be helping transactions if mortgage applications are starting to turn around as interest rates are. So it makes perfect sense now that you explain it, why DocuSign would rally with lower interest rates, would rally with mortgage applications. I see that. AI is probably helping them. This is probably a company that benefits from AI tools. And is that what we should be watching with a company like this? Mortgage apps and interest rates, are those two macro triggers for a stock like this?
Yeah, absolutely. When we talked about app usage being down, we're talking about February. I think that, halfway through March here, I think that we've got reason to believe that March is going to be pretty good. And so the company could have a little bit of a optimistic outlook. I don't know if you can base it on just 2 weeks of data, though, because, overall, I think that there is there's clearly some uncertainty in the general economy. I think the housing market for sure is very responsive to interest rates. And so that's going to be what drives Adobe adoption. But from an AI perspective, you're exactly right. They have an intelligent agreement management platform that has really started to take off with users. And it really makes the whole contract process much more seamless. It uses AI to make that a smarter, faster, more efficient process. We're seeing really good uptake in that and really good, consumer sentiment around that. So they're doing all the right things from a product perspective. They just have to get the macro as a tailwind instead of a headwind, and then it's back off to the races.
Andy, when you look at this really high margin business, asset light, but they've got competition in the space, Adobe, Microsoft, and some other smaller names. Is that part of the problem, along with the fact that maybe business is starting to slow down here a little bit? But, you know, you look at their margins and, you know, if they can fight off some of this competition, it should be okay. And do you guys have an earnings score on this one?
Yeah, you know, from a competition standpoint, we don't see much in terms of uptake of competitors. They have a really good hold on the customers that they have. They had a 99% net revenue retention rate in the quarter last year, which, you know, it's 1% lower than I'm sure they'd like it to be, or 4 or 5% lower, but it's really not bad. It doesn't show erosion due to competition. So in terms of earnings score, we're slightly negative on it. It's mostly a macro call. It's mostly just looking at what's happened to a lot of these names. The momentum seems to carry the day, and momentum is definitely to the downside for the stock right now. So we think the risk is to the downside in the very near term, but long term, really like this name.
All right, down 5% today on the back of those Adobe earnings, I'm thinking. All right, great stuff, Andy. Have a good day.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio. Kev, the